You can build a company with record-breaking sales and an exceptional product, and still find yourself fighting unexpected cash flow shortages and sudden compliance audits. When a growing business struggles to keep cash on hand, the issue is rarely a lack of revenue. The problem stems from how the company's internal financial architecture is structured. Most organizations operate on a fragmented model. They hire a CPA to do the books, a tax advisor for filing, and a wealth manager for investments. Each professional works in complete isolation. Because these experts never communicate, the gaps between them drop critical data. This leads directly to blind spots in financial reporting and conflicting strategies that actively work against each other. Buying financial services in disconnected pieces creates structural friction that caps expansion. Over time, this inefficiency drags a business toward what is known as civilization entropy. This document outlines the specific symptoms of a fragmented structure. Notice how isolated operations result in a cascade of cash flow stress, mounting tax burdens, and high compliance risks. These are not individual human errors. When a system lacks integration, financial instability flows straight down the list, placing a hard ceiling on an organization's growth. Leadership teams often spend their days fighting these specific fires one by one. But until the underlying structural disconnect is repaired, achieving a state of exponential growth is physically restricted by the system itself. The alternative is a unified operating system. Instead of providing isolated accounting or tax services, Zumosun Finance activates a complete, interconnected financial ecosystem. It starts with a chain reaction. Foundational finance data flows directly into accounting, ensuring numbers are immediately usable. That optimized data then feeds into taxation, creating a foundation for consistent regulatory compliance. Systematic compliance secures organizational governance. That governance protects the company's wealth, which then fuels investments and powers further growth. By closing the loop, capital stays within a continuous cycle. The gaps between disconnected advisors are bridged, systematically reducing the potential for wealth leakage. Capital and data flow from one function to the next. What used to be reactive bookkeeping becomes a proactive engine for business intelligence. This framework breaks down how Zumosun builds the ecosystem using a 7-step execution engine. Looking at the first 3 steps, the process requires deep financial diagnosis and architecture design, ensuring secure documentation before operational changes are activated. Moving to the final stages, optimization, support, and financial transformation, the ecosystem is designed to adapt as the company grows. To execute this, law, tax, technology, and operations experts all operate under one roof. This multidisciplinary team prevents the formation of new silos. Activating a financial ecosystem is a repeatable infrastructure. It applies the same engineering logic to early-stage startups, established enterprises, and family offices. This document outlines the starting state for most organizations, categorized as an inactivated financial universe, or IUC. In this phase, potential is locked behind poor visibility and fragmented systems. The target state is the Exponential Financial Universe, or EUC. This represents a fully mature, future-ready organization. Reaching the EUC level yields tangible results. It creates predictable cash flows, scalable wealth creation infrastructures, and renders the enterprise investor-ready. Organizations that merely manage isolated financial reports will continue to lose capital to inefficiency. The advantage belongs to those who build intelligent, interconnected financial ecosystems. Stop trying to solve financial problems piece by piece. Plan, manage, optimize, grow. Talk to a Zumosun activation expert to begin building your infrastructure. Transitioning from fragmented services to a fully integrated ecosystem separates the businesses that just survive from the ones built for compounding growth.